Hello, viewers. Nice to have you back in our interview series on Corona crisis and investing. Today I have Massimo Fugetta here, but before I start with the interview, I would like to ask you to subscribe to my channel, leave a like, and a comment if you have further questions or if you like to say something to me. Thank you. So, hello, Massimo.
Hi, Tillman. Wie geht's?
Nice. Good. Nice to have you on our channel. You're an investor in the Italian stock market and you have a fund that's called Made in Italy Fund. Can you maybe tell us more about your background at the beginning, how you came to this fund and how you're investing? Thank you.
Sure. And thank you for inviting me. I've been a fund manager for a long time, I'm afraid. I started in the late 80s and I've been different places, JP Morgan, asset management, the first 10 years. And then I moved to Italy for a while and had 2 jobs there. But the Made in Italy Fund, which I currently manage, started as a project in 2015. And the fund was finally launched in mid-2016. So it's still a relatively young fund, but it has more than 3 years track record, which is, as you know, a minimum requirement in terms of acceptable track record. And it is, as you said, a fund entirely dedicated to Italian stocks. And not only that, but focused on small caps, which I defined as companies that have a market cap of less than €1 billion. These are in Italy more than 80% of the names quoted on the Italian stock market, but they represent less than 8% of the value of the market, because the market is quite heavily concentrated in 4 sectors: finance, banks and insurance companies, utilities, then there is E&I in oil, and a number of consumers well known like Fiat, Ferrari, and Luxottica and others. And these 40 companies, the largest 40 companies, make up the MIB 40 index, which is dominated by these 4 sectors. More than 2/3 of the value of the market, which, by the way, is quite small as a market overall. I always joke that the entire Italian stock market is worth less than Apple or less than Microsoft. The MIB 40 is the market, with the consequence that if you look at Italy from a top-down view and trying to figure out whether you want to invest in Italy as a country, and therefore buy an index or one of the funds, several funds that are managed around the index, you don't realize how much you're missing. You're invested in those, pretty much in those 4 sectors, and therefore structurally underinvesting in what is the most vital part of the Italian economy and the Italian stock markets, which are small caps. So the idea, our idea, radical idea, has been at the beginning to forget about the large caps and concentrate only on small caps, with the objective of selecting in this universe of around 250 companies, which is now, by the way, gradually increasing because there's been a number of IPOs in the small cap universe in the last couple of years. Select in this universe the best 30 or so companies defined purely from a bottom-up approach, following value investing philosophy, which we're all very familiar with. And that's the fund. The fund has been going on, as I said, since 2016. Its performance is quite good, relatively speaking, of course, because now with the latest quarter, which just ended, the performance is not as good as it was. But yes, that's the fund.
Which companies can be found in the universe you're investing in? Which sectors? Which industries?
Yeah. The fund is quite well diversified from a sector point of view, and I make sure that is the case. But the core of the fund is represented by industrial manufacturing and technology company, which where Italian small caps, smaller companies excel. There are niche sectors and niche companies that in my portfolio, companies that have high return on equities and decent growth prospects over time. And funnily enough, they often tend to compete with German manufacturers. So there is this dichotomy in the European space between Italian companies that compete with German companies, and that's a feature. But I also have we also have some utilities, we also have some financials. So it's a well diversified portfolio from a sector point of view, but it's small caps. Actually, sometimes quite very small caps, companies that have a market cap of even less than 100 million, and sometimes even less than 50 million. So very small, micro, you would say. But I don't see this as a problem or as an obstacle, as long as I have good view, a good grasp of what the company's prospects are. Obviously, there are sometimes problems of liquidity, but there are ways to deal with them, and provide value and create value over time.
So let's go to the current quarter. How is Italy and your universe hit by coronavirus, and what can you describe in your research with the companies and talks with the companies, what they tell you about the current situation?
Well, if you look at the numbers, I was just looking at the quarterly numbers, the updated quarterly numbers. The Italian stock market has done pretty much as bad as everything else. The MIB index we were talking about in the quarter is down. Just 1 second. The MIB index in the quarter is down 26%. France is down also 26%. Germany is down 25%. Germany is down 25%, and so on and so forth. The only exception, I hadn't realized this, I just noticed today, has been Switzerland. It's only, quote unquote, down 11% in the quarter, and also the S&P in local currency is down 20%. But broadly speaking, we can say that markets have been slaughtered indiscriminately during this quarter for reasons that we all know. And the sad thing is that even small stocks have, where you could in principle think that people should should not spend time selling small stocks, but they do. And some of my names have been completely slaughtered.
Mm-hmm.
And I had to obviously resist the temptation to participate in this madness. And as a value investor, you obviously know that is the thing to do. But in the middle, when you're in the middle of things, you get this impulse to sell, which I accurately did not pursue. I actually resisted to do anything in the portfolio, basically. And as a result, my performance this quarter has been marginally better than the index, marginally better than the small cap index, as well as the main MIB index. But of course, I'm down at around 18% in the quarter.
Have you talked to some of your portfolio companies, and what was the feedback if you talked to them?
Well, this is what the main activity in March has been precisely that. It follows from what I've been telling you is that I have not only let's say a deep knowledge of the companies in which I invest, but also have a personal relationship with the management, the CEO and CFO. So I spent most of this month talking to them. I made phone calls and had conversations with them, trying to assess what the impact from a top line point of view, as well as a cost point of view, and most importantly from a balance sheet point of view, was for them currently, and more importantly, what they thought would happen in the future. And the general result is that the good work that I've done selecting these companies meant that the companies in the portfolio are all of them able to have been able to withstand the disruptions, which in Italy, as you know, have been particularly severe. Many of them have been able to continue production and have quite limited disruptions in their value chain. Obviously, there's been some, but they've been able to cope with it. Depending on the sector, some of them have resorted, obviously, to remote work. But when it comes to manufacturing, you got to have people in there, and except a few cases where companies are located in the very harsh hotbeds near in Lombardy, near Bergamo and Brescia, where they were basically forced to close. All the others have continued production. Obviously, this doesn't mean that the problems are over. Obviously, we know for a fact that we are going to see a major, quite a deep recession this quarter, and most probably next quarter. But that's true everywhere. So that's yes. Going back to your question, that's what I've been doing. I've been having conversations with them and trying to assess as much as possible what the future will show, which crucially, as you know, depends not so much on the companies, but on how this epidemic or this pandemic is going to evolve. Because if what we've been seeing, obviously, we all have been shocked and surprised by the fearsome evolution of this. Going back to, I was just reading the comment that I made in my January fact sheet, where it seemed like ages ago. It seemed like this was a localized Chinese thing. Then in February, we gradually realized this was more serious than we thought. And then March, has been all we talked about. And the interesting thing, Tillman, is that this underestimation of the whole deal is not just been confined to markets and laymen. It has been the same for experts, epidemiologists, virologists. They all underestimated at the beginning what the impact was going to be of the virus. And having lived through 2008, there are sharp parallels between that situation, where economists first underestimated the risk and then gradually came to terms with the severity of it, and epidemiologists this time. So as you know, we've sort of been reading all of this with increased interest and increased apprehension, and turned ourselves into impromptu epidemiologists trying to figure out what is there to learn. But the reality is that there is, in the same way as in 2008, there was a wide variety of opinions about the diagnostic and the diagnosis and the prognosis of the financial crisis. There is as wide a dispersion of opinions among epidemiologists of what is going to happen. And what will happen will largely determine what will happen to the economy and therefore to stock markets. I don't know if you share my point of view, but there seems to be quite a warring dispersions of opinion, which means that there is what we call in probability theory Knightian uncertainty. There is just uncertainty. It's difficult to or impossible to put probabilities to the different scenarios. And when that's the case, that you create a situation where the minimum common denominator is panic and overreaction. And that's what's been happening with governmental measures. Italy, as you know, is in a complete lockdown. People hardly get out of their homes, and that's true across the country. It started in a small sub-region within Lombardy, and then over the course of a week or two, it was extended across all Italy, and then France followed, then other countries followed. Germany, as far as I read, is not as bad, but in terms of lockdown measures. And the UK started with a more moderate approach and is now gradually moving towards a more severe approach. But one thing is for sure, that the more this extreme measures remain in place, the larger and harsher will be the impact on the economy, with the danger that what could in principle be a V-shape phenomenon could turn into a much more prolonged slowdown, and could be at a depression which would last several quarters. So I don't know if you've read this morning. I was reading Howard Marks' new memo, which I recommend if you haven't read it. Is as usual very well written, and he's saying, there is an optimistic case and a pessimistic case, and he tends to be more pessimistic because basically because we don't know what's happening in the U.S. We've seen containment work in China. We started to see some evidence that containment in various ways is working in Europe, but what we read in the US is deeply worrying. And whereas in Europe we can sort of seeing the light at the end of the tunnel, in the US there is very deep uncertainty of what's going to happen. And obviously, the man at the helm is, I don't know if you agree, not the most trustworthy and reliable leader you can imagine. And therefore, that's and of course the U.S. is basically fundamental in this. If the U.S. gets out of control, then it's going to be. We're clearly not at the beginning of the end of this crisis. So that's how I live this. And one thing that is that I've been reading and writing about is this policy of testing, because I don't know if you read my post recently, but there's been quite an amazing lack of testing from the beginning. There's been just a couple of countries like Singapore and South Korea that have done massive testing, and I understand Germany has also done quite a bit. But the fact that we're still in a situation where if I want to get tested, I can't. It is really incredible. Until recently, the objection to mass testing has been that the standard test that is available is quite difficult to implement, and it takes hours and hours to get a response, and therefore it is naturally there's been a priority given to testing people with symptoms. But by doing that, we got a very biased picture of what the prevalence and the frequency of the virus is among the general population. Because if you don't test people who do not show symptoms, you have no idea how frequent the virus is across the population. And if you don't have an idea of that, you cannot modulate your response. You have to resort to blanket lockdowns, like what has been happening in Italy, without considering the amount of massive damage you're making not only to the economy, but also to social bonds and psychology, etc. So That's what I've been concentrated on. And as I say, it seems to me very clear that the way to improve the situation is to test, as the Director General of WHO has said recently, which is now more and more possible because Roche and most recently Abbott Labs, and there's also a company in Italy called Diasorin. They've developed tests that take as little as 5 minutes to give a response. Obviously, one has to be sure that these tests are accurate enough for their response to be taken seriously. But as long as that's true, has been ascertained, the way to go to solve and to suppress the virus around the world is to test as many people as possible. But you have to do it in a randomized way. You cannot test people only that have symptoms or people that only want to be tested. You have to take samples of, a bit like you do with opinion polls, for example. You have to take samples of people that are representative of the entire population, and you don't need to test all of them. Statistics tells us that you can have a sample of as little as 1,000 people to be representative of much larger populations. But if you do that, region by region or province by province, you know that maybe in certain regions you have to have some approach and really be drastic in preventing widespread dispersion of the virus. In other regions, you don't have to do that, and this kind of information is at the moment lacking. Which is multiplying the problems, which is the last thing you want. Anyway, sorry for.
No, it's quite interesting. Like maybe I add some color from the German situation. Like the testing capacity is quite huge, as I understand it, with my little knowledge, because we have laboratories that work autonomously, so people could already at the beginning research on the virus and create a big testing capacity. But now we have reached the limit of the testing capacity, and there's also the question how much resources you have to do the testing, because the industry has to scale up their production. There's a certain limit to it, and people are fighting over getting the testing capacities. So I hope there's with the new technologies, a 5-minute test or something like that helps us in this matter. And testing is crucial, and I hope there will also be soon a vaccine. And time will tell how it plays out. So we see different isles of regions that are more open, where you have traffic constraints to other regions. And the big question for me is also the US. I think I'm watching closely what the White House and the press conferences tell the people there, and I think they get it now. And they are taking more serious measures, but I'm not sure if this really helps for the next month, because it's also widespread and very interesting to see.
My sense is that April is going to be tough, probably tougher than March from this point of view, which doesn't necessarily mean it's going to be tough for the stock market, because stock markets obviously anticipate. But I am not in the camp of, this thing is almost over. Let's all cheer up, because so going back to stock markets, other than dabbling with hedging, which I sort of started to do at the beginning, but gave up because it's, as far as I'm concerned, it's an impossible task to, with hindsight, I would have loved to take a decision of, hedging half of my portfolio and sit there. But in practice is a very tough thing to do. So I decided to just go with the flow and do what I said. Talk to my companies, make sure that they're coping with the situation as much as well as possible, because I know in one thing is for sure, this thing will end at one point. And if companies are able to withstand the blow, then their value is there. Their long-term value is there. Prices are meaningless. If a company, there are many companies that have gone down 20, 30, 40%. Does it mean that their value has gone down 20, 30, 40%? Obviously not. So sitting on these companies and doing absolutely nothing is probably the best thing to do. Just enjoy the work that you've done before, and be comfortable that and the experience of 2008 again shows me that if you look at most of my core holdings, they were the first companies whose stock prices started rebounding in 2008, in 2009. So if that's the case, because they are more flexible, their liquidity is also not as great. So when things restart, these are the companies that start performing probably before others. So it's just a matter of hunkering down and wait until this thing ends. Of course, as we said, I'm very worried that it might be a more prolonged phenomenon than we all hope for, and we will see in the next. I think April is going to be crucial here. March has been a very long month. A lot has happened. April is probably going to be as long as, if not longer. But in Italy, the government is talking about gradually reopening the economy in the course of after Easter, in the course of the second half of April, and then more and more in the first couple of weeks in May. We will see whether this is going to be the case. Numbers, which we follow religiously, seem to start suggesting that's a slowdown of the phenomenon, a slowdown in the growth rate. So it's a second derivative phenomenon. So the actual numbers, the absolute numbers are not going down. They're still going up, but at a reduced rate, which sort of looks like a bit what happened a month ago or so in the Wuhan region in China. So as far as Italy is concerned, there is reason for guarded optimism. But if the US gets out of control, then whatever happens in Italy will be largely irrelevant as far as global stock markets are concerned, including Italy and the rest of Europe. That's how I see it.
If you look at your portfolio, do you see winners there, or companies you see as a structural winner in the long term?
In this crisis, well, there is one company which is actually a core one of the largest positions in my portfolio, which, believe it or not, has been up 13% in the quarter, up 13%, versus, as we said, the index down 28%, and that's Intred. It's a 100 million market cap company, and what do they do? They do broadband internet services and they are based in exactly the same region, Bergamo and Brescia, in Lombardy, which has been heavily hit in terms of cases and deaths in Italy. So people have figured out that maybe as people stayed home, they they were subscribing more and more to their services, but it's not really the case. Obviously, people have broadbands, but let's say it's a marginal phenomenon, but it's not. It does not justify the huge discrepancy in performance. But anyway, it's a nice thing to have anyway. Another company that's done well is Renergetica. They do alternative energy plans. It was up 2% in the quarter. Another, actually, the largest position in my portfolio is a company called FinLogic, which closed the quarter down only 2%, actually less than 2%. And they do labeling. They provide service for labeling products. Anyway, so there's been a few sporadic cases of resistance, which you can more or less rationalize, but the rest has been quite heavily hit in an indiscriminate way. There is no reason why companies, beautiful companies like Elen or Landi Renzo or Technogym. Technogym, you all know. Technogym is in the quarter. Technogym, you know of Technogym?
No.
Technogym is they produce machines for gyms. And for obviously, of course, you can rationalize saying, they're closing the gyms, therefore they're not selling machines. But that's a stupid way of thinking because, as you know, the value of a company does not depend on this quarter or next quarter. But the company's down 50% in the quarter. That's completely crazy. So if one is able to take a long-term view, there is a huge amount of value following this quarter, and the brave investors should gradually start investing in this space. And I'm sure that's not the case in Italy only. But in all countries, and but do it in a way that limits the idiosyncratic risk. And from my point of view, that means invest in a fund rather than single names. But it is quite extraordinary. The price displacement that has been happening is indiscriminate and extraordinary, and gives a big opportunity for brave investors who have some cash to start investing at these levels.
Interesting. Maybe for the end of our interview, many people are skeptic to invest in Italy because they think the Italian government might be default soon. Do you have a take on this, or do you ignore this and just do bottom-up stock picking?
The Italian, you mean the Italian?
State.
Oh, okay, okay. Well, yes, that's as you know, a chronic issue in Italy, right? The high debt to GDP level, which obviously in this quarter is going up. It's at the end of the year was around 130% debt to GDP ratio, and with this crisis, it's already probably going above 150, and this opens a quite complicated topic, which is the European the reaction of this situation at the European level, right? From that point of view, what has been happening has been encouraging, both from a monetary point of view, monetary policy point of view, as well as a fiscal policy point of view. We've seen quite strong, radical reactions throughout the world, whereas in 2008 it took several months for governments to realize the severity of the situation and to react accordingly. The reaction has been strong and quick from the start, as you know, as you've been following. At the level of Europe, the issue now is whether it makes sense to go beyond the European monetary, the stability mechanism, and issue Eurobonds, right? And my point of view is that this resistance from Germany and Holland and Austria, the northern countries, to the issuance of Eurobonds is crazy. It's crazy because the situation is such that this is the perfect time to demonstrate that European solidarity is working, especially given the fact that the shock has been non-economic and symmetric around the region. So what better chance there is now to do what Europe is supposed to be doing, i.e. Provide solidarity across the region. And this dithering about whether Eurobonds, i.e. bonds guaranteed by the entire European community, the European Union, are dangerous or not, is really discouraging. We'll see how it works. As you know, that there's been debate and there's been several opinions floating around, and hopefully, and it looks like there may finally be coming to a common ground, and maybe not full-blown Eurobonds, but something similar in terms of using the full power of the stability system to help countries in difficulty. But I'm actually quite surprised that we're still talking about this. Whether I think it will be a natural reaction to just go for it.
I personally hope we will see Eurobonds, but that's the thing, I can't decide in this case.
Of course, yes, yeah. That's the crazy thing. It's as crazy as the lack of testing. Yeah.
To sum our interview up at the end, do you want to add something we haven't discussed?
Well, we've talked about a few names. I could obviously mention others, but some of our viewers will probably know a few Italian names. I don't know if they want to discuss any of them. But as I said, the opportunity is there across the board, except some, isolated cases, stocks are down 20, 30, 40%. And if you're able to maintain control in this environment, now is the time to, in the same way as the time was in October, November of 2008, to gradually invest in a portfolio, in portfolios of this kind of stocks, the more success you'll have. Yes, maybe one thing I'll mention is that I was afraid in the middle of things that at the beginning of March of seeing redemptions in my funds, and I sent a couple of messages around. I don't know if you've seen it, to my distribution list, trying to gently discourage them from doing so. And so far so good. I've been quite successful. I've not seen any redemptions. If anything, I've actually started to see over the course of March a few subscriptions in the fund. That's very encouraging, and very smart, because, as I said, now is the time to invest in these kind of names if their value is, well, if they were cheap before the crisis, they are much, much cheaper after they've gone down 40%. So that's how I see it.
Do you have maybe one or two names to finalize it where you think they have been hit very hard and their intrinsic value is much higher?
Well, I'm just looking at the bottom of the list. If I mentioned LN as a manufacturer of laser systems for the medical and the for a medical and industrial use, LN was down 52% over the quarter. That's as crazy as it gets. Landi Renzo, a stock that I actually recommended in one of the Manual of Ideas calls a couple of years ago, is down 51%. I've been talking to them. They continue production. Their plans are in place. Their balance sheet is strong, and they're down 51%. Technogym we talked about. BS, which is a company that manufactures machinery for to work on wood and other material, is down 40%, and I could go on and on. But I know I'm talking my book, but I would say that rather than pursue single names, a more diversified approach through a fund like mine or something similar would be the best way to go about this.
Then thank you very much for our interview. I hope you stay healthy, and I hope we chat soon again. Thank you.
Thank you, Tillman. Good to be here, and talk to you soon. Bye.
Thank you. Bye.